The stock market crash that everybody is waiting for might actually be a rotation. So yes, indeed. So today we are seeing in the market really a dislocation between overvalued stocks and undervalued stocks. I'm Mehdi for Alpha Mind, and today we are going to deep dive into this idea today that the market might not crash, but just experience a very big rotation from overvalued to undervalued. So let's start with the overvaluation part in the market. So indeed, so we are seeing some pockets of overvaluation in even euphoria in the market today. And first, let's take holistically a look at the market. The P ratio of the S&P 500, I think this is the most basic indicator to look at if the market is overvalued or undervalued, is above 26 for the S&P 500, which is actually in the 99th or even the 100th percentile, I would say, historically. A lot of people would argue that the reason why it is like this is because all of these most prominent companies, so basically the Max 7, for example, have businesses that actually warrant much bigger P ratio than historically the most popular or the biggest market cap, I would say, in other eras. I think that this is a very good point, but the reality is that still, even those big tech companies, even these Max 7 companies, they have very high P ratio historically, even for their business. We are going to see that later, but also we can look at the Buffett indicator, so basically the total market cap of the market divided by the US GDP. Today it's above 200%, and which actually also above the 98th or 99th percentile. So the market is historically very expensive today. So this is why we should have some caution. Then the next actually part of the market which is really overvalued is basically the AI infrastructure. So we have seen a lot of optimism, a lot of expectation with the AI infrastructure capex buildup from basically the hyperscalers and from NVIDIA. And so we are seeing a lot of companies today who have benefited tremendously from this optimism and this expectation. And a lot of companies today in the AI space are actually quite overvalued in terms of all the valuation metrics like price to free cash flow, for example, or even P ratio, or even PS ratio. One of the most prominent examples of that is Palantir, today trading at more than 100 times sales and more than 600 P ratio. So I think that these are very basic. We are not going to deep dive into these companies, but the fact is that even historically, these companies are quite richly valued. And so I think that a lot of companies actually deserve their multiples, but a lot of companies have just benefited from the fact that AI is such a bubble, and I would say they have benefited from the fact that there is so much expectation around AI. So not everyone is going to be able to win with AI, and so that's why I think that some part of the market are not deservedly overvalued. And so that leads us to the Max 7, because we are seeing also historically, so the valuation of the Max 7 have actually quite varied, but today we are seeing companies like Meta, Microsoft, for example, or even Apple, quite richly valued actually. So I wouldn't say here this is a bubble. I think that given the free cash flow and the fact that these companies are really cash machine, I think it's deserved in some ways, but we are still seeing that the valuation behind these companies is still very high historically. So I think that this shows us that they are part of the market which are actually quite overvalued today. Then if we go beyond like these companies who have benefited from AI, I would say like we are seeing a return of the 2021 meme market, and we are seeing that, for example, with Open. We are seeing that with like different companies that actually have no business but are still built up based on like retail frenzy, for example. And I think that a lot of companies, especially like Palantir, for example, are benefiting a lot from option plays and like gamma squeezes, for example. And so this shows you that the market today is not really in a state where it's really fairly valued, and there is a lot of optimism and a lot of euphoria in the market today. I think that even super investors like Howard Marks have mentioned that. I think that people should be cautious. No one wants to actually call the end of the party early, but the reality is that some part of the market are overvalued. Another way to actually see that is the return from crypto, for example, where a lot of companies are now basically like building treasuries of Bitcoin, treasuries of Ethereum, for example. And this is very reminiscent of what we have seen in 2021, where basically like crypto was king and a lot of companies and a lot of expectation were actually baked into a lot of companies. The fact that we are seeing the return of the 10x stocks, for example, the like no valuation matter stock, it shows you that there is too much optimism in the stock market, especially in some part of it. And so basically, like, I think that everybody will agree that there are some part of the market which are definitely overvalued and are actually pending a correction today. And regarding this meme market, I think that there are two types of companies that today are very susceptible to actually crash in the coming years. So the first one are the Bitcoin or Ethereum treasury companies, because this theme has actually been overplayed, and we are seeing some weakness first with MicroStrategy. And I think that any turn around in the crypto in terms of cyclicality, then we are going to see all these companies actually struggle going forward. So we have seen the miners, we have seen strategy, but we are seeing actually now a lot of companies that have actually tried this Bitcoin treasury strategy. And also what is kind of funny is that a lot of mining companies now, they are trying to pivot into AI, providing power to actually hyperscalers. So we are seeing that kind of a struggle going forward for these companies, especially if Bitcoin and Ethereum actually show some weakness. And I think the second type of company that are going to actually struggle are the, I would say, second tier, or like the GPU cloud, because what we are seeing is that there is less demand than expected in terms of GPUs for NVIDIA going forward. We have seen that with the deals from Meta to Google, basically Google having actually enough GPUs today for the demand that they are seeing, especially thanks to their TPUs. And I think that this is going to continue because we have Amazon with Trainium, we have so also Meta doing their own custom silicon. But today we are seeing that the demand for GPUs, for NVIDIA GPUs, is actually slowing down a little bit, which means that more and more companies are not going to actually prioritize companies like CoreWeave or Nebius, for example. I think that these companies are going to realize with the softening of the AI infrastructure capex that this is going to be very difficult to justify their overvaluation going forward. And especially on the CoreWeave side, so we've seen that CoreWeave has actually very suspect financials, I would say. And so I wouldn't be surprised if we are seeing a lot of weaknesses in the name going forward. The fact that we are seeing so many stocks overvalued and so many stocks undervalued, like, shows you there is kind of a dislocation in the market. And this dislocation in the market between overvalued stock, especially on the AI side and on the very speculative side, and the undervalued stocks, which have actually declined from their all-time highs, especially due to a lot of concern around growth, for example, is going to show you that there might be a great rotation from basically speculative to value going forward, especially if we have triggered. And I think that this is going to come, especially when the Fed is going to start cutting rates. We are going to see a change in the hedge fund approach, even though that a lot of people are thinking that lowering interest rate is going to benefit tremendously all these speculative stocks. But what we are going to see that actually is going to actually show you that we are going to enter into a more recession environment. And in this environment, I think a lot of hedge funds, they are going to privilege safety over speculation. And that's why we are going to see a lot of rotation toward names like UNH, NVO, for example, or PayPal even. So I think that free cash flow is going to be prioritized once again, as we have seen so in 2022. And I think that if you're a smart investor today, I think that you should consider starting rotating a little bit toward this position. I think that for the big tech, like especially like companies like Meta, companies like Microsoft or Google, I think the spend in terms of AI infrastructure is still going to be strong, even though that is going to be rationalized. So I think that this position as well are still going to be strong. But companies which are very overvalued, I think they're going to have a very hard time because they are going to re-rate very rapidly. And I think that a lot of investors are going to realize that all this kind of overvaluation is not going to last forever. And another key factor to take into account is with the lowering of interest rate going forward and the expectation that rates are going to be lower in the future, I think a lot of investors, especially dividend investors, they are going to flow towards all the stocks with very good dividend yield. And you can see stock like Novo Nordisk, or you can see stock like UNH with like very undervaluation, or which are very undervalued, and still have pretty good dividend, above 3%, for example. And I think a lot of dividend investors are going to try to find yield in these stocks, given that the yield that they're going to find with all the different bonds and the erosion of the dollars is going to actually push a lot of different investors toward dividend stocks like UNH or Novo Nordisk, for example. So I think that this is something also to consider, given that we are going to see a lot of inflows into this value plays out of the very speculative names. So now we have seen that there is a part of the market which is actually undeservedly overvalued, and we have seen some pockets of the market which are actually very undervalued and that pending kind of a turnaround to actually go back to their historical multiples. So where does this lead us? So basically what we can expect is not a crash from the entire market, definitely, because there are some pockets undervalued. And so this leads us to this concept, and which actually happens a lot in the stock market, about the fact that there is going to be a rotation from overvalued to undervalued. Basically, why? Because most of the hedge funds, like, they want to have some overperformance, and they don't want to be stuck into overvalued play where they are going to actually have some decline in most of the companies when there is going to be a lot more, I would say, pessimism and actually concerns about the AI spending. So we have seen that there is actually a lot of weaknesses, I would say, or softness in terms of AI infrastructure. We have seen that with Meta, where they are kind of turning down a little bit the AI infra or AI capex that they need. And so we are going to continue to see some kind of concerns around AI and AI capexes. And so this leads us to all these flows. They are going to go into companies which are more undervalued, companies which are also more defensive. And if we see like a cut in terms of interest rate, basically due to some recession concerns, we are going to see a lot of inflows into defensive plays. Defensive plays like UNH, defensive plays like Novo Nordisk, for example. Defensive play also like into companies like Verizon, for example. So basically today what you should expect from the market is actually a rotation into undervalued plays. So the way you should position your portfolio is to benefit from this trend that is going to continue and which is going to amplify, especially when we are going to see weaknesses into these overvaluation pockets. And so I think that the most prudent way today is to start rotating as well. And so to actually get a little bit ahead of all the hedge funds, even though I think that they have started already, and you will see that in the next 13F filings that a lot of super investors have actually positioned their portfolio towards this big rotation. I don't think that anyone is actually getting out of the market altogether, but today I think the play is not a stock market crash, it is a great rotation. So here we are, like we have all the elements for actually a great rotation in the market. And so if we are going to see a reduction in terms of overvaluation in some pockets of the market, we are going to see a full-blown stock market crash. I think that everyone who is expecting that is going to be a bit disappointed, because what we are going to see is actually a rotation, definitely, from some overvaluation pocket to undervaluation pockets. And I think that there is still actually very strong companies in the market which are today undervalued and that have not seen a lot of inflows yet. But we have seen with the latest 13F filing that a lot of hedge funds, they have started to take positions in those undervaluation or in those undervalued companies like UNH, for example. So I think that don't be surprised if you see companies like Palantir drop very quickly and companies like UNH or Novo Nordisk recover quite gradually as more and more hedge funds actually are playing this rotation going forward. And if you're interested in other analysis like this one, so please check my other videos, please subscribe, and I invite you as well to check the videos about UNH and Novo Nordisk if you're interested. All of this is not financial advice, and I see you in another one. Bye.